This week's podcast was recorded as the final video in a series of videos that I made for the Global Initiative for Fiscal Transparency. I worked with my colleague Andrew Baker at the University of Sheffield. And in this final video, we discussed how our journey through the process of creating a framework for fiscal transparency had developed. I think that interview, that discussion, is well worth sharing. It was originally created for those videos, but I'm sharing it here now because it gives insight into both our thought processes and the ways in which we need to transform our tax systems so that they're truly accountable to us and deliver outcomes that we as people expect of them, so that tax can fulfill its promise to be a truly transformational tool within our economies to deliver what I call the joy of tax. A society where tax shapes the world we want to live in. So, this is the interview, the discussion between Andrew and myself, Andrew being a professor of political economy at the University of Sheffield, and me in my role as a professor of accounting practice at that same university at the time that this was recorded, and now as an Emeritus professor of accounting practice at Sheffield University Management School.
Hello, I'm Richard Murphy, and this is the final video in the series on tax transparency that we have been making. We is me, Richard Murphy, Professor of Accounting Practice at the University of Sheffield, and my colleague sitting right next to me on this occasion, Andrew Baker, Professor of Politics at the University of Sheffield, plus GIFT, that is the Global Initiative for Fiscal Transparency, and IBP, the International Budget Partnership. Andrew, why did we do this? What's this all about? What was our goal in working on these principles?
The principles are essentially a guide for governments and civil society actors, highlighting how they can work together to arrive at more transparent tax policy that is also more effective at raising revenue and in shaping their economies and societies. Ultimately, the principles are based on a simple equation. It's an equation that we have repeated at several points throughout this series. More transparency equals more confidence and faith in the tax system, more willingness to pay tax, and more clearly thought out targeted policies and processes for tax administration. And in this important respect, what the principles are intended to encourage is a kind of mutual reflection on tax policy and its administration among multiple parties.
Can I stress one point that I don't think we have highlighted enough during the course of making this series? And that is that very obviously IBP and GIFT work with a lot of countries who are in either the poorer or developing and intermediate nations of the world by and large. But I happen to think that these principles apply universally. It doesn't matter whether you're in one of the poorest nations in the world or one of the richest nations in the world. That formula you've just outlined, that the understanding of tax within the population and that discussion around tax transparency will always have this outcome, I think. This is a universal truth. And so anybody who's watching this who thinks, well, that doesn't apply to me, I live in wherever, in Europe or whatever. No, that's not true. This is something that is of use, I believe, to everyone.
I think the other thing that's worth emphasising about the principles as well is that GIFT have a track record in generating international principles. They generated one in 2011, which were high-level principles on fiscal transparency, one in 2016 on participatory budgeting, and now most recently the tax transparency principles in 2022. And they are a device and a mechanism for peer review, for dialogue with civil society, for dialogue with outside bodies and experts. A constant review of how the tax system's functioning, whether it's fulfilling its objectives, and whether the information and the data is made available to enable all of that to happen. Now, if you remember, Richard, when we began the work for GIFT on tax transparency, the idea of tax transparency was mainly understood in terms of creating tools to highlight who's using tax havens and more detailed reporting of multinational companies' accounts. So it was mainly focused on private actors and individuals. And we wanted to extend the concept of tax transparency to say that governments also have responsibilities and obligations to produce more transparent tax systems, to report on their intentions and performance, which, if followed, will benefit all members of society.
I think that's an incredibly important point, because you're absolutely right. From the time that I first got involved in tax transparency and tax justice issues, which was soon after the turn of the century, that focus was on tax havens and all the abuses that went on there. And we have made real progress there. I think it's very important to say that. And also on corporate behaviour in those places as well, through country-by-country reporting, for example. But there wasn't this focus on government, and now it's entirely appropriate that we see this as a partnership. But that brings out something else, which I think is a key underpinning feature of this work. It is very much about dialogue. We're talking about something here which is about an exchange of information, a sharing of views. And I think that's something that we've tried to focus on. And we'll get to it. I'm sure we're going to mention tax spillovers sometime during the course of what we talk about now. But the point is that we are trying to say the tax authority must talk to the taxpayer, the tax agent needs to understand just what the tax authority is trying to do. And if that dialogue exists, then this whole process of tax transparency can create this public good, which is an effective functioning tax system which will benefit everyone.
That's absolutely correct. And to get back to that original question of why the principles exist, the principles don't exist because Andrew Baker and Richard Murphy think they're a good idea. There was a demand out there in the international community for something like this. So if we go back to 2019, the World Bank's Global Tax Programme asked GIFT to conduct work on tax transparency, to identify the information civil society organisations needed to contribute and participate in tax policy. And GIFT at that time was also asked to bring forward a draft of global principles on tax transparency, to act as minimum standards to guide governments in disclosing tax policy information. And the new principles approved in 2022 at the meeting in Bogota were the culmination of those efforts. But that process also involved an extensive consultation exercise. The final version of the principles reflect input from governments and civil society actors in 8 countries, as well as the OECD's governance team, and extensive comments from IMF and World Bank staff. So they're a collective effort drawing on multiple sources.
Yeah, I think that's incredibly important. We might have our names on some of the documents, as do GIFT, but the reality is that this was heavily peer-reviewed by colleagues with real-world experience along the way. Now, we've worked around tax and governance principles and so on for a long time, but their input was critical to the way in which this has happened. So, can I ask you another question? How should these be applied? How do the principles work in practice then?
At this point, I'm going to read something that comes directly off the GIFT site to you, because I think it kind of gets to the nub of that question in a way. GIFT explains that these new transparency principles promote improvements in the scope, consistency and quality of information that governments make available to the public, and establish a framework for governments to meaningfully engage with their stakeholders around issues of tax policy and administration, with the ultimate goal of ensuring that public resources are used to advance the public interest. These new principles, they say, address fundamental components of good governance and cultivate the trust required to ensure a more sustainable fiscal pact, namely the right of access to information, proactive transparency, accountability and public participation. So if you work through the 14 principles sequentially, a variety of ways through which that broad goal can be achieved are spelt out in each individual principle. So the principles are a journey, they're a destination, a route map to getting to enhanced tax transparency. And when we arrive at principle 14, of course, principle 14 is the potential gold standard of tax transparency, where a government and a jurisdiction has the capacity to start doing systematic, regular estimates of its tax gap, and then exploring the reasons it has a tax gap through a tax spillover assessment, which will identify the flaws, faults and contradictions in its tax system, and in turn how those might be addressed through reform efforts.
Yeah, I think that's really important. There is a destination here, and the tax gap is, in my opinion, absolutely fundamental to good management of a tax system. It is important to measure it, but measuring it is in itself of no use unless there is this understanding of what does it tell us about how we can improve the system. This goes back to something else which is really important, and we repeat this theme through the course and everything we've been talking about and through the principles. This is a cyclical process. There isn't a linear process through the 14 principles and you say, I've reached the tax gap and tax spillover, so everything's now okay. Everything feeds back into the process of what are your objectives? How do you turn that from being a set of objectives into a plan? How does that plan get communicated? How is it consulted upon to win consent? So we're talking about something here which is an ongoing narrative. And I think that's important in this understanding of how these principles are applied. They're not a one-off exercise. They're a commitment to a process that will continue. But the commitment to preparing and publishing and then understanding a tax gap is the signal that ultimately a government is saying this matters. And actually I think this then raises the question of who might benefit from this. And really there's several beneficiaries, but two jump out. Obviously one is the government itself, because it wants to collect as much tax as it can to achieve its goals. But secondly, it actually will almost invariably want to collect that amount of tax with the minimum hassle possible, which means the lowest possible tax rates and the least disruption to its population, because frankly that will make it more popular. And most governments do like to have some degree of popularity with the people they're governing. So it's very important to understand that this is a process which ultimately benefits the taxpayer, because the taxpayer will be able to pay less if those who don't want to participate in the tax system, and every tax system the world over has people who do not wish to participate in the tax system. Whatever the reason, let's not bother to discuss whether this is tax avoidance and tax evasion and what the differences are now. If the government is committed to understanding how those issues are addressed, then those people who will comply with the system because they think it's the right thing to do, again, as part of their own good governance principles, if you like, they will benefit from this because there will be a lower demand on them for tax revenue if everybody plays their part because it is understood that they can be identified and be required to make the payments that are expected of them. So I feel as though the principles are really about creating a level playing field in tax for people in the whole of a jurisdiction so that it can be understood also who is contributing how, why and when. Again, this is important too. I believe that tax should broadly be paid by those with the greatest capacity to make payment. And one of the things that the principles will also draw out is whether that is actually the case or not. So if there are conflicts within taxes and between taxes, so that, for example, and this is one of the issues we look at in tax spillovers, if a country has a capital gains tax rate which is lower than its income tax rate, very clearly there's an immediate incentive for somebody to actually recognise a capital gain rather than income. Even more perhaps apparent when a country has a lower corporation tax rate than it might have an income tax rate, which is not an uncommon situation, an obvious incentive to therefore incorporate a company. That creates unlevel playing fields, and the whole of these principles highlight that. Not so that it will say what you should necessarily do. What it's saying is have the discussion about why you've got these differentials, understand what they're for, and then work out whether they're still a benefit. Again, we come back to the same idea, the cyclical nature of this discussion in creating tax policy and implementing it.
I think that is a really, really important point, and we really have to emphasise it, that ordinary people, ordinary citizens benefit from these principles, and they benefit from these principles for exactly the reasons that you're saying. So if you look at Principle 2 is a really important one. It calls on governments to specify the objectives of their tax policies, and it goes through a variety of ways in which they might do that. So that isn't just about giving forecasts on revenue to be raised. It's about what do you want the socio-economic impact of your tax policies to be? What do you want your distribution within society to look like? Which particular sectors of the economy are you hoping to grow and to prosper? What kind of activities in society and in the economy do you actually want to penalise, and do you want to discourage and disincentivize? So there's a potential for tax to shape the economy. But going back to Principle 2, one of the things that's called for there in the more detailed notes is break down on who's paying what tax by income group, by socioeconomic status, by gender. So very quickly it should become clear if one group appears to be assuming a disproportionate burden of paying tax within the system.
I should also add that in some countries that should include regional analysis as well, because this is sometimes a real cause of stress. And one of the things that we want to do by having the principles and having this information is to reduce those points of stress so that the system works better, and therefore the chance of misunderstanding and even political conflict arising is reduced as a consequence. I think that's important.
The other principle that's really important here is Principle 11. And Principle 11 calls for a systematic, thorough review of the reliefs, exemptions and allowances in the tax system, and to conduct a cost-benefit analysis of that. Because what so-called tax expenditures reduce the tax bill of certain people on certain groups and certain actors within society. And if that's going to happen, we need to know what the benefits of that are to wider society and the wider economy. And that means that reliefs, exemptions and allowances have to be reviewed to see if they encourage and are producing a distributional bias, which would lead to the kinds of unlevel playing fields that you were referring to, Richard.
I think so. Can I just sort of take that a little bit further? Because you mentioned a cost-benefit analysis. Something that really matters to me, and which I'm not quite sure that we've ever emphasised enough inside the videos to date, is that this is not an incredibly expensive process. I actually think it's quite a cheap process. And I know, for example, how tax gap work has taken place inside the UK, and I've peer-reviewed the European Union's VAT gap analysis. And these actually are surprisingly modestly priced in terms of their cost of production. The number of people involved in producing this data is relatively small, but the learning process that is resulting from that work is very significant, and the shared knowledge it gives rise to is also dramatic, which is where the peer review process, by the way, comes in as part of this. We think that it is of benefit for countries to actually share notes with each other, because if you look at this as a relatively modest accounting exercise using data that you are in most cases already going to generate within the system, and all you're doing is resorting that data, and that's what accounting databases let you do, to answer a different question from the first one, which is, in every tax system, how much did you get? But then to ask the question, well, how much didn't you get, for example, which is what a tax gap is, and why didn't you, which is what a tax spillover analysis is, you can actually answer those questions relatively quickly. Now, the answers won't be perfect, but after 45 years of accounting experience, I don't think that any set of accounts I've ever seen are perfect. I don't think there is such a thing as perfect data. There's data that is good enough to inform decisions. And there needs to be an honesty about the fact that you can improve systems and you can improve the quality of data. But until you start, you can't even begin that process of learning about what you need to do. So we encourage people to get into the principles. You don't have to very obviously get through to Principle 14 within a year of starting. But the principles are deliberately structured, and this was your idea, Andrew, and I give you full credit for this. You decided that they should really be on the basis of basic principles, and then intermediate principles, and then advanced principles, and then aspirational principles, the one that you will eventually reach. And I think that's really important, because is it 6 or 7 of them are basic? And these are ones that should be capable of delivery fairly quickly. But simply starting off with some of those, basically we're talking about the first 7 or so principles, things like do have a tax policy, do communicate that policy, do ensure that there is protection for the taxpayer whilst ensuring that they have access to all the information they need, getting these balances right. Those things are really fundamental to tax transparency and building the confidence in the system that will then let you go on to do these slightly more advanced techniques, but which will then inform policy. So there is a way into this which is not very costly. There is never going to be an argument that this cannot produce a positive payback for a tax administration that does this, because I believe every single tax administration could generate more revenue, but just as importantly, generate learning which will improve the quality of its management, governance and so on.
I think it bears repeating that the 14 principles are essentially 14 steps to making tax policy and administration more transparent and therefore more effective in producing the outcomes desired by society. So they can be followed and applied sequentially. And when that happens, they give you a reading on how each country is performing in formulating its tax policies. And each principle has a set of notes on how to interpret and apply that principle and the kind of things to be considered. So in a very real sense, what the principles are doing is they're offering a health check of a tax system and the extent to which policy making and evaluation is fully transparent. And in that sense, the principles, when applied to any country, will provide pointers to how things could be done better or improvements that could be made. And as we've said, they're designed to promote peer review, mutual learning. So you don't necessarily need a group of outside experts to come in and conduct a review of the extent to which the principles are being applied and adhered to in a particular country. Groups of civil society actors could try and use the principles themselves and then bring pressure on governments to increase their transparency and turn around to them and say, look, this is how you're faring. You're doing okay in these areas, you're doing less well in these areas. So let's have a discussion about how we make improvements in these particular areas.
Well, we did this during the course of our research. We tried out a process of actually talking to civil society actors. Now, admittedly, people who knew the tax system of their country reasonably well as civil society actors, but not necessarily people who had ever worked inside a tax administration, people who were simply members of their society, to see if we could produce what our ultimate goal was, which was a tax spillover analysis. And whilst the result could undoubtedly have been improved, and let's be clear, as I've already said, we can always improve things, what came out of that process was something that was really interesting and worthwhile, even though the time expended was relatively short. And I cannot stress this enough, that this is a process which will give a greater payback if you invest more in it. But relatively speaking, the amount of money required, the amount of effort required to start the process is quite modest, and the payback will, I think, prove to those who take part in it that this is worthwhile. I just want to make one further point about those notes to the various principles. They're not prescriptive. They are guidance. Every country will have different circumstances, different traditions, different problems that it's trying to face within its tax system, different inheritances, different fundamental legal frameworks. You might be on common law, you might be on Roman law, you might be on something else entirely altogether. Different bases of taxing companies. One might be on cash flow, one might be on an accruals principle. All of these things make big differences to the way you look at your tax system. So we're not saying there's one answer to everything. What we're trying to do is guide people in the circumstances that they're in, and I think that's really important as well, to highlight that now. But which means that the principles also ask questions of the people using them. They're not a set of rules you follow. You will need to adapt them for your use.
Yeah, what the principles are not doing, that's really important, Richard. What the principles are not doing is coming up with a list of outcomes that government should implement. You know, they should have these kinds of tax policies, or they should have those kinds of tax policies.
That's absolutely right. We're not saying
there are
that.
choices to be made by governments in conjunction with the key actors in their societies. What the principles are is a reference point or blueprint for how governments can go about releasing more information on their intentions and outcomes in relation to tax policy, to engage in more public dialogue on that, to put in place frameworks for evaluating their tax system and for regularising and improving their release of data while pointing to potential gains in revenue raising, democratic legitimacy, tax morale, as public confidence in the tax system and willingness to pay tax. That's where we want to get to with these principles, and that's why we think government should start taking the principles seriously, and civil society actors should be encouraging them to measure themselves against the principles. That's really what we want to see.
One of the things that actually I hear complained about so often in so many countries, and I wouldn't like to imagine how many countries I've been to talk about tax over the last 15 to 20 years. It's a lot. And the point about it is this, that I hear time and again, oh, the politicians don't understand tax, the people don't understand tax, or whatever else it might be. What we're trying to do is set up a system which actually asks questions at a level people should also be able to understand. We don't expect politicians to be experts in tax. Why should we? They bring all sorts of experience into their lives as politicians. But tax is a key issue about which they've got to make a decision. So what we're expecting by creating the standards is that the informed person who can think about things will ask the right questions. And I'm going to go back to one of the points you made about really choosing between tax policies. And a simple example of this. Do we want to have a capital gains tax? So on the profits people make while selling assets? Or do we want a gifts tax or an inheritance tax, as it might be called in some countries? Do we want a wealth tax? Now, these are questions which I know are very common in some of the countries I know at present, where these things aren't really operating very well. But until you've actually set out the reasons why you have or haven't got these taxes, or why they're different from income taxes in the way in which they operate and the rates that they charge, you haven't got a basis for discussion. So what we are asking for in the principles is that a tax administration, or better, the government department, the Treasury, whatever it might be called, the Finance Ministry, who are responsible for overall tax policy, are actually saying this is why we chose to do this. If they put on record their tax strategy and say why we chose to do this, so we know why they chose not to do something else as well, you can have that informed debate at the quite high level, which people who are not experts in the actual application of tax law can still very much participate in. And I think that's incredibly important. It's good to have involvement of people who understand tax law in this process. I'm not saying otherwise, and I've spent a lifetime of reading tax law. But I think we need it to be accessible to plenty of others. Otherwise, it just becomes another technical exercise. This is much more than that.
It certainly is. And actually, this brings us nicely on to what is probably the final point I want to make in this discussion. I think broadly there's an underappreciation of the value of tax and what it can achieve. So even in many of the largest, most advanced countries in the world, there tends to be a sense that tax is about how you pay for public services. It's about how you raise revenue. And that's where the value and importance of tax starts and stops. But tax can impact what an economy looks like, which sectors are prioritised and why, what kind of products and activities you want to encourage, which you want to discourage. It can impact distribution and be used to reduce or increase inequality. And there are no preordained correct answers to any of those questions, but they do need to be fully debated. And for that to happen, you have to have accessible, clear information, data, stated intentions, measures of performance in delivering those stated objectives. And all of that information has to be made available and reviewed periodically. And that's what the principles call for. And they provide a systematic step-by-step basis for doing that. And what our hope is that that will lead to better strategies and better choices based on better information, and ultimately more effective, more targeted tax policies that are more effective in raising revenue, certainly, but more importantly, arriving at their stated initial objectives. And the principles are a route map for countries to follow to enable them to build better tax systems that serve their populations better and encourage an active, reflective, informed politics around taxation. That's where we're wanting to go on this. I do want to just bring in one example that, if we look at some of the more advanced countries around the world, many of them offer a variety of tax reliefs and allowances, so-called expenditures, that essentially mean income earned from investing and transacting in financial assets is taxed much more generously than income earned from employment. But such data and information is often largely concealed from the public. And there are principles are really about putting such things on the table more clearly so they can be debated in a more inclusive and informed fashion by a wider range of interested priorities. And, that's what the principles are intended to do, produce better informed, more targeted policies.
I agree with you entirely. I want to give you one example from very recent experience of my own, but I think it's relevant to highlight that last point. In the UK, where we're talking, where we work, the cost of tax reliefs on pension contributions made mainly by the wealthy in the UK are £70 billion a year. But that figure is not highlighted in any of the information produced by the government. At the same time, the total cost of supporting people who are out of work or who have disabilities is around £70 billion a year. That figure is highlighted in government information. If we understood that there are two numbers which need comparison with regard to different social priority, we could actually then decide what's the relevant weighting and balance to be created between them, which is not possible at present simply because the information is not there up front for people to know or understand. It's that information which informs debate, and fundamentally that's what our goal is by doing all of this. If we succeed in improving the quality of debate around tax so that people truly understand how tax works for the benefit of society as a whole, we've achieved our goals. And that, I think, is a good place to round this up, don't you?
I think it is, Richard, and it's only appropriate that you have the last word in this series.
Thanks for watching this video. If you've enjoyed it, please do click the like and subscribe buttons because they do genuinely help us spread the word on YouTube. As importantly, could you have a look at the section below this video where it says more, and there you'll find a link to my blog. And if you follow that for the specific link to the blog entry related to this video, you'll find a transcript of this video and lots of other related material, plus a ChatGPT prompt that you could use to write a letter to your MP on the contents of this video, which will turn you into a campaigner, which will be a great thing to do. Finally, if you do appreciate the work we're doing, can you think about giving us a donation? If you'd like to do so, there's a link below, or you can find one on my blog where there's a Ko-fi button saying, please buy me a coffee. Thanks a lot, and we'll see you again soon.